Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Stephen Innes, Chief Global Market Strategist at Axie. Hey Steve, great to have you on the show again.
Thanks for having me, Brian. Good to see you again.
Now, before we speak to you, Steve, let's take a quick look at how markets around the region are performing, starting with the SGX, which is at 2,933.91. It's up 0.09%. Bursa Malaysia is at 1,582.95. It's up 0.61%. Across the region, we have the Nikkei at 0.12% up. It's at 29,424.05. Shanghai Composite is up 1.22% at 3,575.66. The Hang Seng is at 29,432.92. It's up 0.39%. The ASX 200 bucks the trend. It's down 0.54% at 6,843.80. And rounding off, we have the Kospi just up marginally at 0.38% at 3,102.95. So Steve, looking at markets around the region, now the major indices on Wall Street rose overnight record highs. And that's 6 straight days of gains. So give us your perspectives on markets and their performance this morning.
I just think it's a case of stimulus tides float all ships and everything's going up on the reflation trade. I think the fact that we could be lavished with 1.9 trillion, probably more like 1.7 or 1.5 in realistics view, is providing a reflationary lift-off bounce across all assets. And that's what we're really driving on. But I think underneath the hood here, there's a growing conviction that the White House is the right mix of characters to take us to the next level here, whether it's for market concerns or whether it's to fight the pandemic. The market seems to be giving a vote of
confidence on for the Biden administration.
Yeah,
driving the sentiment.
Yeah, I think to a large degree that's part and parcel to the bounce in sentiment. You know, we know exactly how much stimulus is coming. That's pretty much baked into the cake right now. So I think the optimism level is really on what progress is going to be made on the vaccine front, and I think the market's giving a vote of confidence on that level.
Now, how about, is some of that also renewed optimism of a synchronized global recovery story that seems to be coming out in the last week or so?
Yeah, well, we're seeing that playing out a little bit in the Forex markets today. I think, you know, there is some idiosyncratic plays in the market right now where investors are preferring to invest in countries that are going past the vaccine, or going past the virus quicker, or have a better vaccine rollout, i.e. Asia, and then UK, and sort of Europe is lagging. But the consensus out here is that, you know, Europe is going to get their act together. They've got a pretty big social safety net and really excel in healthcare typically. And it's a bit surprising that they've sort of fumbled the ball here. And markets expect that'll be one of the, you know, roll out self-correcting mechanisms, so to speak, and Europe will get their act together and catch up on the leaderboard race to vaccine rollouts.
Now, Steve, moving on to commodities, the Brent just traded above $60 this morning. What's fueling this surge in oil prices, despite what we would think in terms of a demand? You know, it's not a demand-related thing because the economy still haven't taken off.
It's really a supply and demand driven factor, you know, supply because of OPEC curtailments. But we're starting to see positive signs emerging from economies that weren't really doing so well, and particularly the US. They started consuming loads of domestic crude oil in January, more so than they have since the COVID crunch. And that's pretty positive. And that gives some reassurances to markets who have really been looking at China providing the backbone for demand. China has remained absolutely resilient through this whole process. I mean, they've been continually lining up to buy cargoes at the Platts 10-minute window every day, and this continues to resonate well with the oil market. So I think what we're seeing here is the demand in the US starting to pick up. I think that could be a function of lockdown abatement, which is naturally driving the curve lower and people feel more confident to come out. But I also think the vaccine optimism for future demand is actually filtering through the markets also. And I think this is why we're seeing so much positive input in oil markets these days.
Now, Steve, there's one other element that I want to ask you that may be playing into investors' minds long term. The focus on ESG investments will make it difficult for the shale guys in the US to get funding for new projects. Has that been baked into the market somewhat as well, and that's fueling that optimism?
It's an evolving story. Obviously there's a price point for everything where money gets attracted. Right now, it's not getting attracted. They're having a tough time raising cash because the banks are sort of turning off oil. It's not fossil fuels in general are being scorned upon by a lot of asset managers right now because they're more in favor of building their books around the greening of the world, and that presents a worrying concern. But there's always individual investors, that can round up consortiums of investors to raise enough money. But it is a problem. But hey, when shale oil starts moving towards $60 a barrel, I think you'll find people lined up to invest back in the shale oil again. It's just a natural progression. People are greedy out there, and they'll always chase where they think they can find a quick buck. Mostly that would be getting expressed through energy stocks, and we're starting to see energy stocks actually lift off too in this reflation trade. So there is money. There is some semblance of money coming back to the pool, but not through the typical bank channels who pretty much turned off. They'll have to rely on private investors to raise funds these days.
Now, what events and data should we be looking out for in this very short Chinese New Year week that may perhaps move markets?
Yeah, I think just the total financing, social financing data is going to be a big input for local markets. We've already seen the PBOC push back on any rate hike expectations, and I think the markets have to get a good read that there's still a lot of loans getting put out in the markets in January. This will be pretty positive for sentiment post-Lunar New Year. So that's the key thing I'm focusing on for regional sentiment this week.
Steve, thank you very much for your insights.
Thanks for having me, Brian.
We've been speaking to Stephen Innes, Chief Global Market Strategist at Axie, on BizTech's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.